Good morning, traders and investors. So I'm going to share a trade with you this morning that I do not, I stress this, I do not, big X here, do not make this trade, okay? I'm dead serious about this, but this trade is going to be designed to show you something specific. And I also want to point out very, very clearly, this is not any flaw at all in OptionStrat or any of the software or the options modeling programs out there. But it is something that a trader, regardless of what platform you're using for modeling, a trader could sometimes set up something like this and think that they found the Holy Grail, like I did many, many years ago, only to back up the truck and put on some big trades and then find out, oops, there was something I didn't understand about this. So I want to get into this a little bit. So let's just take a very quick look here at this particular trade that I've modeled. And I'm providing the link in the description down below so that you can copy this into your platform as well. So this is in CrowdStrike, which is a networking security platform. But you'll notice that anywhere in this trade, if it looks as though if I put on this trade, no matter what happens in the price of the underlying, I'm either going to make $100 if this thing blows way out to the upside or the downside, or if I happen to hit a home run and expire close to one of these peaks, I could have a much higher return. So first of all, I think you would agree with me if you look at this from a modeling standpoint, the way it's modeled here right now, that this trade shows that there's no way I'm going to lose on it, right? So, but again, do not make this trade. So, but I do want you to copy the link, and they have earnings. Let's just take a look here at CrowdStrike. So CrowdStrike here, I mean, no matter how high it goes, no matter how low it goes, I mean, I would expect maybe CrowdStrike, if it were to announce earnings, and, you know, from the technical standpoint, maybe if it doesn't do so well, it pulls back into the 190. If it does great, maybe it pops up to even 250, somewhere along those lines. That's really kind of irrelevant. That's not what I'm trying to show you here. But what this trade is doing, it is what's called a double diagonal. In this case, I am selling the short strikes here, the 195 put. I'm buying the 200 put. I'm selling the 225 call, buying the 220 call. So we're going to look at kind of how these react after earnings. So this has earnings tomorrow night, Tuesday night, and that's going to be the 28th. And then on the open, on the 29th, I want you to, again, copy the link I'm going to share with you below. I want you to copy that into your OptionStrat platform, and then I want you to have this open on your screen when the market opens Wednesday morning so that you can see what happens. Now, I'm going to do a follow-up video on this as well, and then I'll get into kind of the nuts and bolts and explain what's going on. But again, I want to stress to everyone two key things here. One, do not make this trade, okay? While it could come out profitable, it could also end in a disaster that if you don't understand time spreads, and again, the key here is that we're dealing with a time variation between these options. If you don't understand time spreads, this is not what it appears to be. So note that anytime we're modeling something where all of the strikes expire in the same expiration, your tent will be solid. Your tent is not going to vary. What the tent shows you, you can trust, okay? That's the way modeling, the algorithms, if you will, the Black-Scholes, geez, I'm drawing a blank on the other ones. There's like 3 different ways you can model options. They're all very similar. Black-Scholes is probably the most common one. But all of these different ones don't take into account the variance of time at this point. And I will point out that OptionStrat has taken a huge leap forward in that area, where I can come down and I can model these strikes differently. I can put a different volatility on the front strikes than what's on the back strikes for modeling purposes. So they're way ahead of a lot of other software programs out there in their ability to do this. But that doesn't mean that you still might not get caught looking at something like this, where you have a time spread and thinking, ooh, I've got a no-lose trade here, back up the truck, okay? So again, do not make this trade. Copy the link below, but then look for the follow-up video, or have this open yourself in your OptionStrat platform come Wednesday morning, and let's see how it reacts. And then I'll do a follow-up video kind of explaining what happened, why it happened, how it happened. So again, this is in no way, shape, or form to point out a discrepancy or anything in OptionStrat, because this is not. Again, OptionStrat's gone above and beyond what most people do by allowing us to model these things separately. But this is something that a trader could get caught by if they didn't know what they were looking for. So with that, I'm going to wrap this up, and I will be back on Wednesday, probably late in the day or maybe Thursday morning, and there will be a follow-up video on this. Again, I'm going to put a link down below so that you can copy this trade into your platform. And I'll say it one final time, do not make this trade. All right, that's it for now, and this should be a good learning lesson, everyone. I've been waiting for a while for something like this to crop up that I could demonstrate, because this doesn't happen often, but it will happen from time to time. And again, I just remember when I found this many years ago, I was in a trading group and I started telling everybody, listen, I found a trade that can't lose. It can't lose. Look at this. And it lost. So anyhow, we'll see you in a day or two. Take care.